according to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watches coming in on March 18, 2020, and the stock market has diverged. You've heard me say this in the past. I've talked about it a lot, but we are seeing different divergences, and right now is creating a very unique opportunity. Either we're going to see the market converge really quickly to certain assets. Well, I'll tell you right away, it's oil. This is a big deal. I said if it drops below 30, we even hit a newer low out of all of this. This is telling us something, but now also just putting this into context now with what we're seeing with TLT, bonds, and all that, this is going to be a very, very interesting event here. And it has to do with the velocity. So I have that for you. I have a little mini econ lesson, but we're going to kind of pack it in here. Remind me to extrapolate upon this tomorrow on stream, and I'll give you a real full-on lesson with this. But I have a few specific currencies. We're relating it to oil, and then we're going to talk about what the Fed did today, because they threw the kitchen sink even further, and it's crazy what happened today. So this has a lot of stuff. We saw the market bounce up. We closed 1,000 points. However, this is really small, and it's kind of concerning to me. So not only do I have that for you, I also have the play of the month, kind of. Well, because last month it was already TLT, so we've already seen that play out. But even better, this could be the play of next month. This is a play I'm going to set up. I have a theory. I'm going to put my money where my mouth is. It's a really, really weird play. We're going to explain that. And then I have two other stocks. I did buy more than two other options today, but there's two other companies I played, and one of them I really, really do like the theory. So I'm going to share that with you guys, go over that, and get you guys ready for tomorrow. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing. YouTube.com/thestockmarket. Come anytime the market is open. Opening bell to closing bell. It's free. All we ask is that you're positive, respectful. We got the news live. We're going over all of these live pressers, everything you need. Maybe you just need to talk to somebody. Maybe you got to stay at home and you need a coat to join. We got you, baby. Okay, I'm sorry, but don't forget the most important thing you need to do. Post your watches below. Let us know what you're looking at. You got any plays, comments, remixes? What do you think about these plays? Any other ideas to the general thesis? Anything like that? Share it. Please, please, please post it below. And thank you all for being positive, respectful, and just being active and involved. It means a lot. And shot one of the plays today. It came out from the chest. Shout out Jay Hearn, baby. You guys inspire me, man. You inspire me. I love it. I'm so proud. It's sad. But right off the bat, oil is the next wave. This is still a big deal. Oil dropped below this level. They said they want an emergency OPEC meeting. They're going to try to come to the table. But the fact is that now that it's dropping with all of the other pressures here, this is even going to lead to the main play we're going to talk about, and it has to do with the dollar. Pretty much, oil keeps coming down, and the longer oil stays down, the point is, when this first happened with oil, this was bad to begin with, but it's just like the whole Chinese situation. Picture what happened. You saw the first move, and then things got better for a little bit, but the longer it stays closed, the longer oil stays low, and now there's a potential for something to come out with this meeting. That's not good, and watch out for a fake OPEC rumor. That usually happens when it's like this, but the fact that the market's not even moving, that's something interesting. But as you see here, this is even overlaid with China. Oil diverged from China. Oil has diverged now even from the S&P 500. So considering this bounce and this move, pretty much you saw oil take a newer leg and newer level down, but now, so the SPY is still at the level from a couple days ago. It's still kind of holding up. That is a divergence. I won't mention the bonds because there is bonds just capitulated today. And this has to even just talk about what we're seeing, and even now the GLD play, which we made, I'm going to discuss that. But this thing with oil is important, and not only that, and really what I'm factoring in here, what you saw with the Fed today, they threw the kitchen sink. But if this doesn't work, and it's very, like I said, I'm very concerned with this move, this isn't going to be good. And the key to watch is going to be the prices of options and spreads. Both the spreads on stocks, those are widening because of this liquidity issue. This has to relate to the dollar, and this is what I'm saying. Oil is going to affect the dollar as people are scrambling for liquidity. You're seeing liquidations. That's what the bonds are showing. When the TLT goes down like that, that means people are selling out of bonds. When you start seeing people sell out of bonds, gold, stocks, everything, that is a mass liquidation event. that's a way to even identify some of this quote unquote liquidity crisis. But this is the main thing I want to watch for. I have a video I posted about 3 weeks ago. It's saying how I said the biggest risk to the stock market, and it's going to be the dollar. And I made that video. What happened? The dollar went down and then it shot back up. And now you're seeing the effect on asset prices. So one, the price of oil, the price of food, all of that will impact the price of the dollar amongst just overall trade. So now with trade being halted all across the globe, these effects are starting to come through. And now how can I say that? Well, look at the price of the stocks, but now this is even related to oil. These are some of the countries we're tied to with oil the most, but now you're getting the Canadian dollar weakening. So when this chart goes up, that means the currency's weakening, but more than pretty much last time you saw January 16 coming at the end of 2015, which was, again, you had the flash crash in August, and then the first weakening started during the first oil crisis. You're now starting to see the effects of oil shine through, but that's Canada. Then peso's weaker than ever. Again, last time they weakened was Donald Trump's election. The other weakening came from Brexit, and that is a point we're seeing here too. We're seeing as much volatility in the prices and even where the VIX is at. This is it's looking like there's a volatility event. Again, this stuff is important. Yes, the virus has a big deal. Please stay inside, wash your hands. But at the same time now, this is setting off a lot of stuff. So one, again, look at the currencies, and I'm waiting, and this is more macro, and this takes a while. But then now Russia's starting to do the weakening. That's what it did in 2014. And again, 2015, 2016, that was when the market made a second leg down after having that first drop in 2015. So all these currencies are boiling up with the dollar going stronger. That is going to mess with oil. And then now that OPEC meeting. So keep an eye out for that. That is a big deal. But now what is this coming in conjunction with? All the currencies, the commodities, everything making this move, what we're seeing with bonds. What happened today? The Fed is throwing the kitchen sink. I don't even know the numbers. I know they're at least opening $1 trillion of liquidity for the repos. I think they're doing even more. And I said they're going to do $1 trillion a day or in the mornings and then $500 billion in the evenings. But the point is they cut the rates to zero. They're now doing this massive amount of repos. But now also today they invoked Section 13.3 rules. Pretty much if you want to, you don't need to understand this. You could look it up. You just look up Section 13 of the Federal Reserve. You know, it's pretty much how they're governed. But it outlines the rules and what they're allowed to do. This is like their constitution. And the thing about what these rules means, what they did today, this is in a way invoking martial law. It's under unique and extraordinary circumstances. They have the power to do certain stuff. And what they're going to be doing now is lending to private credit facilities. They're pretty much, it's going to allow the Fed to give money to both different banks, shadow banks, and pretty much it widens their discretion to operate a little bit outside the rules. And now even after hours, Mnuchin, he approved the creation of a primary dealer credit facility to provide liquidity to just what the Fed decided to do today. They're trying to now even add liquidity and provide liquidity to a bunch of companies. They're just widening the scope so that banks don't get trapped, or some banks now, that's why they lowered the reserve requirements, because even though they're putting all this repo out, people can't take it if there's certain regulations that won't let them to happen. But the fact is the markets aren't reacting well to this. You saw both the emergency cut, then this, and then what happened last week. The fact this is not bringing up the market. This is the first time. Remember, they tried the repos in September and October. It's not working anymore. And now they've unleashed every single thing they have. And that's the scary part. Because if this doesn't give the market some steam and the market is not able to find a bottom or hold some sort of level, and we keep seeing these 3 to 5% days day after day, the market is going to be left for months without a new tool. You know, they created a brand new tool with this primary credit dealer facility. But now what I'm saying is, even if they wanted to do back to QE and even to get a scope of this, the last QE, 2009, you know, the first wave they did was $1 trillion. They just did that in 1 hour, the repos. So if they can't come up with any other, solution, the next part would be pretty much buy stocks, like actually just buy physical assets. That is quantitative easing. But the only way they could do that is if they change their charter, and that would require approval from Congress, and that would take a few weeks or a few months. But again, if the market doesn't make a bounce by then, I mean, this could cause a lot of disruptions, and it's already looking like that. So that being said, watch the prices of options and the spreads on actual stocks too, because even if you see a move, we had that talk today. Even if there's a lot of movement, they've been controlling it with the limits and the limit halts and how everything's been moving. Watch the prices of options until we really see a deflation. And a good indicator is the VIX. Pretty much with the VIX at this extraordinarily high level and still holding with these big moves, even with TLT, as long as that volatility still persists and they're widening the spreads, and you're seeing the dollar strengthen. These are all pointing to a lack of liquidity, and why, again, watch that as the indicator, because when liquidity is there, those spreads will tighten, the prices will change, things will move a lot more efficiently. They're not moving efficiently now, and that is because there's not an efficient amount of liquidity. So even in perspective now with everything you're seeing, Fed is, and this is why it's so important right now and critical, one, how everything develops in the next 2 weeks. I think yesterday was the start of the turning point, so now that clock starts today even more. But the point is, they're taking such extreme measures to increase money in the system, liquidity, and lower rates, and they're trying to cause inflation, that if the reverse happens, that is going to be bad, or it's even just showing there's just not enough money in the system, or I think there is enough money, but what's happening with trade and economies and trade lines and everything and mixed plus regulation, it's freezing that money, and this is an issue of money that gets stuck, and that's kind of what this is happening right now. So that's why, too, if these work to unstick the money and the money's now able to flow, this is what they want to normalize bonds and get everything, flowing again, you will see an incredible bounce. However, if that money is not necessarily stuck, but stuck and then half of it disappears, that's the problem. But we need to see what happens, and this is going to be very, very telling and very, very important. So that being said, this is very important for the play I want to go over. So you got the background, so let us get into the plays. So I have 3 different plays that I made today. The main play, I would say, because this one we could build a position around. This is a June contract, I believe, but we could build a big position around this. It doesn't move much, but this is probably the stupidest, dumbest, riskiest play in a weird way. So again, please do not trade anything you see on screen. This is educational purposes only. Please understand, option traders shouldn't risk. You can lose almost financial educational purposes only. Thank you for that. But be smart with this, and I'm saying this because I've looked at this trade for a long, long time. I remember last time I looked at this trade was Brexit, given what was happening with currencies and what it did. So that's why I showed you all the currencies. I'm telling you why oil is important, and then now just overall liquidity and the problem. Like I said, the dollar, it shoots down and goes up, and that's what I was even going to say with gold. We still have that GLD play, and you guys have, if you've seen the price of gold or gold futures, this is GLD. But what do you guys notice this thing looks like? It's kind of reflecting the dollar chart, but essentially, as the dollar gets strength, it's going to hurt commodities. But what's going to happen is once ever that liquidity returns or normalize, the fact is gold is, the strong dollar brings commodity prices down. But essentially when your dollar starts to weaken again, once all of that money and all of the stimulus is what happened in 08, that's why it took till 2009 for gold to rip up. Once all that liquidity was there and hit, once the dollar weakens again, it will adjust according to inflation or even just how it works with commodities. So that is when the gold is going to rip. But even in the meantime, like I'm saying, in a liquidation event, TLT could kind of hedge it, but keep that in mind. Keep in mind the dollar, but that's what this play is, UUP. This is pretty much a dollar index. This is just a index fund, and they hold a bunch of dollars. And now I said I've watched this play for a long time, and I've never played it because it doesn't move a lot. This is reflecting the move of currency. I mean, in the last 5 years, it's moved like $3 or $5 or $4. So this thing isn't going to move a lot. So it's hard to play the contracts because you're trying to get in the money and then profit off of being in the money here. So you could even look across the board. The liquidity on this is pretty bad, and it doesn't matter. And this is one of the examples here. It's not liquid, but there's also this is premium sellers heaven, and there's a lot of people willing to sell on this. Again, it's people, this is almost like the big short trade in a weird way, because you're betting on one of the most stable things in the world. That's why everybody would be willing to provide this to you, and the prices won't even move up because so many you're taking a stupid bet. This is almost a guaranteed loss, because even then at charging a certain premium, UUP is not going to move up a lot. Like this was a big day today for it, and look at this last, this big dollar run up and dollar rise, but that was a $2 move. So it's an interesting play, but pretty much this is playing on the deflation theory. So I started small because even then the spreads were really wide before there was any volume on this, and it was very, very liquid. It was like a 10-cent spread. You'll even start to see it. You'll start to see all of them widen. You'll even just take a look at them tomorrow. So that's why I started this play. I'm going to get more. I bought 50 of these 28 calls at 36 cents, and I bought them for June because I want to hold these. I want to hold these, see how they play out. Depending on what happens, I mean, with the market, we could play more till June. We could get September, January. But I'm going to average down on this play, but I'm using this first 50 contracts as kind of my first step in the water. Again, I've looked at this play for such a long time, and I've never played it just because what I know about options, what I know about this bet, why so many people willing to sell this bet, and even just how it moves, it's not really the most favorable play to make with options, even buying a stock. So it's kind of a Forex trade through options. You have to either do massive amounts of leverage on it to actually make it beneficial off small moves, but even then, even if you did take that leverage, you would just take an extraordinary risk that really wouldn't justify it. So this is a weird play, but I like it. I'm going to build one position around that. The next play that I'm going to be watching, I like this one more. I'll come back to the other one, but CMG, I bought a May 320 put at 1,420. Yeah, 420. Elon. But I spent a little bit more, and shout out Jay Herm. I was talking about it on stream. I was going to do a credit spread, a call credit spread, and short the calls on Las Vegas Sands because they were the only hotel up. Trump had that hotel meeting today, and it seemed pretty grim. And, Vegas is already shut down. They were even up a little bit. I was like, well, the puts, there was limited puts to buy. So what I did instead, or what I was looking to do instead, was sell a credit spread on the calls, because then that way you could at least make more money, and that way I could profit off of the stock not going up or going down, but I wouldn't have to pay the high premium for, 50% out the money, or even spending, hundreds of dollars. But the risk to reward on that play, I was going to risk like $2,000 of collateral to make $800. It really wasn't worth it. So I was like, I might as well just take a big trade, and Jay Herm called it out. Yeah, he said Chipotle, and I was like, well, we saw McDonald's got clapped. They're doing all of these food restriction stuff. Chipotle is going to have food delivery, but they don't really have too many drive-thrus. That's part of it, again, and as we're seeing things develop. But the thing about Chipotle, take a look. It's just coming back down to the 2019 level, so it has given up a lot. But last time they had any sort of crisis, they were at 250. People invested in Chipotle for growth. It has the same risk of food that you're seeing with now some of these other restaurant companies, but the primary multiple, the reason why people are willing to pay, $800, $900 at some point for Chipotle is because of its growth. So this is going to hurt growth anytime growth impacts have been changed, especially now with health. I'm even thinking, well, there's not too many smart people sometimes. They may confuse coronavirus with Ebola from Chipotle, but I like the play, but even better about it, I made sure it covered earnings. So that's what I liked about it, but the play cost a little bit more money. So I got the May 1st 320, and you could watch on stream. I'll make another video on this on how we snake the chain and make sure we got a deal, but the spreads were wide. This isn't that liquid, so I like the fact that it covers earnings, but and surprisingly, even though this seems far out the money from this price now, shockingly, this is one standard deviation outside, one and a half standard deviations, but you paid a lot of money for it, so I took that bigger risk there. It's a little bit more expensive, but I like that play. I like Chipotle, and the best part is keep a watch on this trade, because if I lose on this trade, and you could start to get some of these options with time in the lower prices, or they add more options, I like the general thesis of this play, so keep watch for it. If you guys know any companies like this, call it out as well. And then finally, I did the Shopify trade. This is the other one. I like the trade. Again, Shopify's an IPO. Again, they still have growth perspectives. I think a lot, again, guidance and earnings. That was the next thesis we talked about from yesterday. But I got the June 120 puts at 380 each. So I am spending a little bit more here, and this is the risk I'm taking, because I told you guys about that regime shift and what I'm seeing here. So I'm willing to put a little bit more money, but that's because I still have a lot of profits. I've still booked a lot of profits, but my idea here is now get some of these plays that could catch a lot of meat on the bone, because if I lose on some of those, I'll be able to get even better plays, but then we could start repositioning. So I'm responding to the environment here. However, I am taking a larger level of risk, and you could see that through the prices of the contracts I'm buying. So don't get FOMO. Don't feel like you need to do it, but this is kind of me even just paving the way to even see what the prices are going to be. I'm taking the profits I have now. I'm trying to be strategic, and I'm throwing my money out on plays right now so we could start to monitor, especially the ones coming into earnings. Pretty much any of these earnings plays I set up for now coming into earnings in a month or two, we're going to be really, really set up. So I got those June 120s at 380. They came down. They were pretty decent. Again, you're paying a substantial premium on them. I mean, I really can't believe. That's what I'm saying. I can't believe I even bought this here. So we're in a different regime. We've already seen prices move in the fact they're holding, but there's a lot of room for discount here, and there's a lot of room for havoc even on the downside. So you guys are seeing, that's what I'm saying, watch the option premiums. And then finally, I made a Redfin play today. This one was kind of bunk. We got the April 18th. I got these 13s. I think I got them at $2. So they went up a little bit, but they didn't really move much. And again, they just held the volatility. That's the crazy part. We've been right and then wrong in these trades. When we're right and it goes in our favor, we make a lot. But even when we're wrong, the premium premiums are still holding the value. So I bought 3 of these at $200 this morning. And Redfin, the logic was playing the real estate data that came out. Redfin even came out the night before and said they're expecting a slowdown and that they've seen it. But then they even said they're expecting the data to come out bad. However, the data came out, but it wasn't as bad. A lot of people were expecting it. So they dropped 8% off the open in the morning. They were outpacing the market, but then they bounced, but then they came back. I mean, they were up 4% at one point. Lots of big swings, and you're seeing that in the market. So I have those. I'm just holding them. Some people, they wanted to cut out because they eventually they went up a lot, then they dropped. They even came down to like 195 below where we paid at one point. But I set out the balance I'm willing to lose. I'm going to hold it a little bit again. It's giving you a double whammy. We got to play the news and then still just get overall put exposure. That is pretty much it as far as the plays. Still holding a lot of stuff. I took a lot of profits on many different things. I'd watch Boeing. I'm mad I sold out of that strangle yesterday. I would have been in the money, but it's there. But watch Boeing. Watch their effect. I would say even watch GE, watch J&J, some of these companies. Walmart, I'm still holding that. Those plays held. I did sell. Remember on Friday, we got those 118 calls. I sold 4 of those at like 260 today, and I'm still holding 1 of those in the money. But watch Walmart. I mean, even better, watch HD as well, too. I mean, they dropped a lot. The premiums were expensive, but then how McDonald's moved. McDonald's, this is breaking that HD rotation there, so pay attention to that. I want to see what Home Depot is going to do, but this is going to break a rotation in some of these bigger stocks we look at, and this is industry-based versus, broader value-based, so watch out for that. But I like those. I'm still holding that Adobe. That play came down. We have those Aprils. I forgot the strike on there, but now they're going for like less than like 160 is what I paid. They're really far at the money, but that play was up and it's down, so I'm still holding that. I still like that. And then TLT came down a lot. I lost on those Marches. We lost $400 on the third set of Marches that we got, because remember we sold out and flipped some. We got them. We were up on those. I didn't take profits. The TLT Junes, those are the ghetto spread. I even lost $2,000 on the ghetto spread, but remember I have the Maze ghetto spreaded, 14,000 guaranteed profit, and then we have the TLT June. I have not ghetto spreaded. That one was $1,000 to 30 grand, but now it's sitting at $10,000. So it's still up 1,000%. Options are still expensive, but this capitulation has dropped some of the premium. I'm still going to hold it a little bit until we see kind of how this play out, and that's why the GLD is there to back it up. But that GLD worked. The GLDs are up like 150 now, and I really like how it's moving. We got to see in a few days, and again, watch the dollar, but then those USO puts were up on those. I'm just going to be watching a lot of those. I'm going to be going after this growth earnings type plays that we've been looking at, some of the plays I made today, and then I'm going to see what we could build around UUP or anything like that. But that's your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. You better keep your helmet on. I told you, baby, it's game time. You need to stand firm, and you need to prioritize what's important. Pay attention and listen. Everything is right there. There is a lot of information before you. You have to read between the lines. I need you to start looking ahead. Don't get caught up in the short term when even the options and market makers aren't even get caught up in the short term. That's why the prices aren't changing. I need you focused. I need you to seize it. And guess what, baby? You only got to hit 2 good plays. Rebuke the FOMO. You don't need to act now. We need to wait. You need to wait, and you need to watch. And guess what? I'm making moves. I'll tell you when you should stop waiting. Worst case scenario, but we got more events. We have more stuff coming. You need to be prepared. You need to control the balances, and you need to be positive. You need to be respectful, and just show love even to yourself, baby. So I love you all. I'm going to see you in the morning. Let's go.